What did you make of Fed Chair Jerome Powell's comments around inflation temporarily rising? And do you have confidence in the market and the central bank's ability to keep inflation around that 2% level?
Well, I think the basic message I got from Chairman Powell is he's a man that feels like he's getting exactly what he wants from financial markets right now. I think that, we've seen enough of a rise in the 10-year Treasury to take a little bit of steam out of the equity and the housing markets. I think that reassures him that he's not going to have to worry so much about a bubble. That means that he feels like he's getting a green light to ignore what is an almost it's certain spike in inflation that we're going to get in the year-over-year numbers in the next several months. He made it very clear he considers that to be temporary. And I'm going to also pick on something that Diane said, because I think this is the most important thing that came out of this message today, in my opinion, and that is the absolute clarity from Treasury Secretary Yellen that they don't really care about the unemployment rate, that what they are focused on, they want a high-pressure economy. They want to get back to that world where wages are rising for working-class Americans, and they don't see that as being reflected in the unemployment rate. They see that as being reflected in the participation rate. There's been a huge amount of damage done to that. I think they see a huge amount of slack giving them a green light to keep funding big deficits with printed money. And as long as Fed Chairman Powell sees a green light to keep the printing presses rolling, equity market should feel very comfortable continuing to go up.
Michael, it certainly does seem that way. Chairman, I'm going to call her the Secretary, Diane Swonk, because she's been both chair and secretary.
I know, it's hard.
Ms. Yellen.
She's the trio.
Ms. Yellen certainly did in her last answer talk about that participation rate that Michael just highlighted for us there, that the unemployment may be 9% if you included that. One of the things that seemed to...
9.5% if you include those who are absent.
Yeah, if you see it did not seem that the Fed chair was particularly concerned about inflation or rising interest rates. At what point do you think the Fed chair would become concerned about rising interest rates, and what would he do?
You know, what's interesting is they won't really talk about that, which I think is very interesting. They won't talk about yield curve controls, although I think Lael Brainerd is the only Fed governor that has said, the backup in bond yields had actually caught her eye. But I do think it's interesting that, we really do have, a technical issue. Last year, as the crisis unfolded, many prices fell. So your year-on-year comparisons are going to be high, even if inflation momentum doesn't pick up over the next several months. And there are some things that we're coming back on already. I was talking to President Barkin for the National Association for Business Economics yesterday, and he talked about $300 a day to rent a car because there's no cars right now. That's not the kind of inflation they want to raise rates on, because they know that's because there's no rental cars right now, and that's something that will work itself out. And I think we'll see that over the summer. What we're talking about is a 6-month period where technical issues and a boom in the sort of supply chain issues, bottlenecks, and the boom in demand that we see could boost prices temporarily. In order for them to become systemic price increases, persistent price increases, you need them in wages. You need a lot of more mistakes. It took 15 years to get where we got to in the 1970s, including a Federal Reserve that acquiesced to a President Nixon that wanted the Fed to ease to ensure the 1972 elections. And yes, there are tapes on that. So we had a lot of policy mistakes. 80% of wages back in the 1970s were tied to COLA increases. For those who don't remember what those are, cost of living, the CPI, all of the increases in oil prices that were going on then got baked into wages and fed that stagflationary cycle. We just don't have those dynamics today, and that's what Powell's betting on.
Shepard Smith here. Thanks for watching CNBC on YouTube.